Hello everyone, I'm Sirali Gupta and today I have a special guest who will shed some light on the future of insurance industry. Please welcome Alok Rungta, MD and CEO of Future Generali India Life Insurance Company. Hi sir, so how do you envision your company's growth in the coming years? What are your growth plans?
So good afternoon, Sirali. Thanks for this introduction. Uh, we intend to grow at a CAGR of 15 to 18% in the next 3 years, and we are a multi-purpose organization. We plan to grow on all aspects of business in terms of various channels. Okay, obviously, defining new products and market is part of our growth strategy. And by that strategy and growth rates, we think we should be climbing ladders in terms of market share and market growth.
Okay, so sir, as you said that your company will grow on a CAGR of 15 to 18%. So are you on track with that? Because I have read that your company tends to grow at 15 to 18% till 2026. So what has the progress been so far? I just want to know.
Yeah, so we measure ourselves on calendar year, and last calendar year the new business growth was 18%. Okay, and that was the first year of growth plan. So with that results in hand, we do believe we are in the right direction. The trajectory is good, and the results are favorable in terms of what we see, which has given us more and more confidence that going ahead, we will be on track towards our goals and objectives.
Okay. I have also read that your company's annual report shows that company have been in loss and it has broadened year on year. So do you expect some relief this year?
Yeah, see, since last year we are running a massive transformation agenda, which includes two aspects. One is obviously to drive growth, which I just mentioned to you that we are growing, but also we are trying to be more and more efficient over a period of time. For example, for the first 8 9 months of the financial year, our losses were 34 to 37% less than last year. Okay, and the 3 year vision, which is there for growth, also includes a vision that how we can be also profitable in 3 years. So we are trying to work on both the sides. We are trying to drive growth, but also ensuring that we are more and more efficient in our achieving our bottom line objectives as well.
Okay. Sir, so the renewal premium of the company has increased 8% year on year as of March 2023. So how do you view the renewal premium in this year? And will the company will able to maintain the uptrend going ahead in FY25?
Yeah. See, this year also we are almost closed for the year, and we do see a 9 to 10% growth over the last year growth. See, with the new business growing at 18 to 10, 15 to 18% as a target, we do anticipate renewal also to grow at 10 to 12% on a CAGR basis. And if you look at the last two financial year, I'm assuming 24 been also counted, we are on a trajectory. So we have been ticking all the right boxes so far in the transformation journey, and I believe there is no reason for us to have any question marks on the future also.
Okay, great, sir. So how have been the 13th month and 25th month persistency trends? So how do you view the plan to grow it further?
See, what we observe is in different channels, our experiences are different, right? As a common theme, all the channels have to improve from the baseline they had last year. But there were channels where we saw a low level of persistency, especially say in terms of third party, where we have brokers and corporate agents. Last year we have done a fantastic job. Actually, not in last year, but in last 18 to 24 months, the team has done a great job in improving persistency even in those buckets, and we see a positive trend both on 13 and 25th month. So persistency is the core of the business, right? If you don't have a persistent business, we'll never be able to generate profitable value over the period of time. And we do slice and dice our data in such a manner that we do see that in every cohorts, in every segments, whether it is product segment or business segments, are we moving in the right direction? And the last year results, if any, were very pleasing that especially in areas where we were struggling in the past, we have started seeing upward trends. and that's very, very encouraging for us.
Okay. So, switching gears to the latest trends in the insurance space, how do you view the revised guidelines of surrender value by the insurance regulator? How will it affect the company and the policyholder, according to you?
See, firstly, I have to appreciate the regulator, right? Uh, Compared to the draft which came, and the final regulation which has come, I think the regulator has been very receptive, because a lot of us initially were not clear about where the draft was heading. But if you look at the final regulation, I think they have done a splendid job of doing a good balance in terms of the way the regulations are. Now, why I'm saying balance is, see, as a regulator, the key role, while other role, is also to protect policyholders' interest, right, customers' interest. So with this one, they have ensured that the customer surrender value is very well articulated in the beginning of the contract as a mandatory, and it is consistently growing over a period of time. But at the same time, they have been very conscious of the fact that the insurance company in the first 2 3 years do incur high cost, because we have a high cost of acquisition and we create new business strain. So they have been receptive to see that the surrender values in the first 2 3 years doesn't trigger an adverse behavior from the customer, which can be detrimental overall. So finally, as I said, I would like to thank the regulator that they have come up with a very balanced approach, wherein they have protected the policy of the interest, which is the right thing, but also been receptive to what makes sense from a business perspective as well.
Okay. So, the next question is, are you planning to take the company public? Like, is an IPO on the way?
Nothing, we don't plan anything for now. That's not something which is in the horizon.
Okay. Okay. Thank you, sir, for joining us.